This is your host, Stephen Sargeant of the Around the Coin podcast. An amazing episode today with Dmitry Tolok, the co-founder and head of business development of Primex Labs. Primex focuses mostly on non-custodial prime brokerage protocol. So they're basically facilitating leverage trading for traders in that instance without using derivatives. Very interesting topic. We go into traditional lending. We talk a little bit about decentralized lending and the movement forward to decentralized exchanges. But we also talk about things like KYC, AML, and compliance. And what are some of the partnerships they're doing, including security elements with companies like Halborn. This is a great episode to kind of wet your feet, to wet your taste buds into what's going to be happening in the space of decentralized and leverage trading. Enjoy the show. This is Stephen Sargeant, host of the Around the Coin podcast. We have Dmitry Tolok, co-founder and head of business development at Primex Labs. Dmitry, tell us a little bit about yourself and what you and the team are doing at Primex Labs.
Yeah, great to be here. Hello, Stephen. Yeah, my name is Dmitry. I'm one of the co-founders at Primex Finance. We are a liquidity protocol that allows traders to use lender liquidity for leverage trading across multiple aggregated DEXs. So we basically, as a protocol, provide a variety of services for those who want to amplify their return across DeFi. This is what we're doing. Fully decentralized, non-custodial.
First did with blockchains, right? You worked a little bit with other blockchains, Cosmos and Polkadot. Tell us about your first experience, maybe with cryptocurrency or blockchain, and what was your experience like working with those blockchain ecosystems? Those are some of the biggest blockchain ecosystems from a transaction volume standpoint.
Yeah, definitely. So before pivoting to Primex 2 years ago, a bit more than 2 years ago, actually, it was in 2021. We've been operating as a dev shop pretty much. So we've been helping ecosystems, blockchains with their core development in the past. My other co-founder, he's a cryptographer, so really technical guy. And we actually worked on some really challenging projects before. So mostly layer one. So we've been developing the blockchains, not really the applications that time, but we've been always bullish on DeFi and we've been following DEX and what's happening in the lending space in DeFi. That was the reason why we actually came up with that idea of building Primex. So that's the history behind it. And after building a few projects for blockchains and a few apps as well, we've been sort of already organizing that DeFi sort of unit inside the company. And that actually deformed that first force to actually build Primex. So that's how it started.
That's interesting. So we just recorded an episode with Alex Pruden, who's one of the founders of Alio, and they were working on a privacy layer one blockchain. Is there a reason why you didn't start a layer one blockchain? Because one of his issues with things like Ethereum is that it does everything. So it's hard when you want to focus on one function because it does everything. It's not really meant for one function. Whereas you're creating something that is really focused for leverage and derivative trading. Is there a reason why you didn't create a layer one? And I usually don't ask this question. I'm usually asking why bother creating a layer one when there's so many successful experiences creating a layer two. But in this instance, I would love to know, since you've already been working with building on blockchains or building with other blockchain ecosystems on the L1 side, is there a reason why you and your team didn't decide to create your own?
Oh, well, that's a really good one. I would say that I was really passionate about DeFi, so it was but the other co-founder as well. We were, really passionate about what's happening in DeFi in general, and we saw really huge potential in it, and we still see it. And we think that DeFi, basically the pillar of, the application of blockchain in general. So this was the main reason, I think, and we're really excited about this idea about building something for under-collateralized lending. And set of services, financial services that can be accessible by everyone in a fully decentralized way without dealing with intermediaries. So that was I'd say the biggest passion for us. But we haven't really thought about building our own level one for sure. So we've been just focused on building a DeFi application, which is called Primex Finance.
Awesome. Yeah. I would have also accepted that you prefer sleep, because I think anyone building a layer one blockchain probably hasn't slept in the last probably 3 years.
Yeah, I mean, it's extremely challenging. I'm actually in touch with a few L1s, of course, myself. So we are personally connected with some folks. It's really challenging. I mean, building a project in blockchain is in Web3. It's of course always challenging, but building an L1 solution, new one, it's just something else. So
Yeah, so that's a totally different beast.
really
Now,
resource
you
intense. Yeah.
talked about your non-custodial brokerage services, decentralized. Where did you see a niche in the lending industry? Because I know, a few years back, lending tree was the big thing disrupting the industry, right? Peer-to-peer lending and borrowing, low default rates. Everyone was,
Yep.
shocked by this. Now you're taking this a step forward and saying, hey, we're going to even take this to a decentralized place. Can you tell me a little bit about what Primex Labs is doing and where you saw that niche where you're like, hey, nobody's really servicing this market. We definitely want to dive in here.
Oh, definitely. One of the key issues in DeFi in general, in lending, I would say, space is that you still have to lock, in most cases, you still have to lock more value than you borrow. And so you basically have to put significant amount of capital as collateral to be able to use those services. So, and that's,
Sorry, I want to
that's
stop you there. Why is
Sure.
that? Is it because of the fluctuation of the prices of cryptocurrency that you have to put in more than you're going to borrow?
It's because lenders in that specific implementation that is currently being the biggest one, the lenders shouldn't have financial risks, right? So they only have, of course, technical risks, protocol risks. But of course, those who borrow need to over-collateralize their positions for lenders to essentially get their money back. And there is a huge area for disruption in lending in general. It can be I'm happy to talk about this in more detail, but the key idea of Primex was to essentially enable under collateralized lending. And by that, I mean that our goal was to provide a wide variety of possibilities for borrowers, including traders, to essentially lock less value than they can borrow for specific operations across DeFi. It was previously and still is possible with flash loans, but it's a completely different thing. So flash loan is quite limited in terms of its application in real life, to be frank. So our goal was to build a more sophisticated sort of protocol for a variety of different use cases, lending use cases, I would say. And we started with margin trading.
And so, just so I can have a better understanding for the audience, when you say like, you're trying to, not make them over collateralize when they're lending, is that similar to the traditional financial where, you might put up a collateral, but it's nowhere near the amount that the bank's going to lend you, but the bank is going to take that little 20, 30% risk for a high interest rate that they would receive? Is that a kind of an accurate metaphor, or am I missing something?
Well, yeah. So in our case on Primex, basically what we're trying to do is replicate that experience of maybe TradFi in some way, with that big difference that there is no single intermediary or risk evaluation component that is involved into issuing the loans, right? So that's where we see the biggest disruption. So in our case, all the logic, how those loans are taken, for example, for margin trading across DEXs, it's all part of smart contracts. It's all of course based on some specific parameters of which assets can be, for example, borrowed at what rate and stuff. But this is where we basically utilize smart contracts in order to get trade-off and centralized intermediaries. But the logic is pretty much the same. Yes. So basically you can imagine a set of services across DeFi like liquid staking, lending protocols, DEXs, like margin trading on DEXs, LP on DEXs. Those are all liquidity use cases where you can get return by by putting your liquidity to work, your money to work, right? So our goal is to create more opportunities for those sophisticated borrowers or traders to amplify their return. And for example, automate a position closing when they see that when the return is not high enough, for example, and they still have to pay some amount for using that liquidity. There is a big room for disruption in that area, for improvements, and that's what we're doing exactly.
And I was gonna kind of lead to my next question when you talked about decentralized. Is I think it's BitMEX anyway. They're kind of like a derivative crypto platform. Yep. How do you differ from them? Like, why would someone come to you versus going to a BitMEX, let's say?
Yeah, definitely. So in our first implementation, in the first use case that is already live, actually launched a few weeks ago. First launch on Polygon and then Arbitrum, and 1 week ago launched on the Ethereum mainnet. Currently on Primex, you can only trade. So it's only, it only supports directional trading on DEXs. We aggregate DEXs, we aggregate those liquidity pools. So we wrote all the swaps and to essentially get the optimal price. And we add that lender liquidity on top for seamless borrowing and margin trading. And also lots of different automations such as different kinds of limit orders and position management. That's what we do. That's how the protocol works already. And those pretty much are the benefits that traders can get from it. And the key difference here is that we do not utilize any additional sort of asset class, which is we don't use derivatives, and that's the key difference. That's how we differentiate from GMX, let's say, or other great protocols like DYDX, but they are different. There you trade derivatives. In our case, you trade spot, so you basically trade real liquidity that is present on DEXs, and this is one of the key differences. If we talk more about, if we compare it with BitMEX, of course, we should also consider the aspect of custodian, because in Primex, we are not a custodian, right? So you just connect your Web3 wallet and you start using it, and that's it. So as simple as that. So there is no entity, no organization that holds your balance, nothing like this. So that's the key difference if we compare it to BitMEX. Of course, it's lower compared to BitMEX, because in BitMEX or other centralized platforms, it's sort of, they are, of course, faster in terms of, for example, trade execution. But in our case, you trade spot on decentralized markets. And so that these are the key differences. Speaking about the differences in the user flow, of course, with all that beauty of DeFi and composability, we basically support a wide variety of different assets. So you can trade, for example, altcoin to altcoin with leverage, because usually when you trade on centralized exchanges or some derivatives platforms, you basically stick to stablecoin as a medium to trade something, right? So in our case, you can trade random token to another random token.
It's very limited on centralized exchanges.
Yeah,
it's kind of why people want to go to some of these, foreign exchanges to get access to assets like sushi token or,
for example,
you're giving them that exposure and that leverage, whereas maybe a centralized exchange will give them but not the exposure.
And
I'm listening right now, and I'm working in TradFi. You're mentioning assets, and the first thing that comes to my mind is, well, real world asset tokenization, RWA, and they're like, hey, we got a ton of assets that we like to swap, switch, leverage. Can you talk about how you maybe position yourself in that market, or maybe for the future, how do you see yourself servicing this emerging asset, this real world asset tokenization that we're seeing with things like real estate and boring stuff like bonds? You probably see it a little bit differently or a little bit more exciting in your world.
Yeah, definitely. We actually are following what's happening. It's not that much yet, but we already see some protocols in the space that do provide access to some RWAs already that you can trade. There is also a few options protocols where you can trade options. But in the context of Primex, if we imagine that something is eventually tokenized, let's say as a simple, I don't know, ERC20 token, some commodity, for example, or something else, it definitely can be used as a collateral, and it can be traded, and it can be traded as leverage. And for trading those RWAs, we already have the full working infrastructure in place. Of course, there is a few aspects that we still have to consider, such as AML, KYC. We are still DEX dependent because we are deployed on top of decentralized exchanges, and we need AML and KYB liquidity there. And we should do that KYB checks on our end as well. Perhaps there will be some EVM ecosystem, Ethereum-based ecosystem where all the liquidity is already AML'd. We see some projects like this. So we are just following what's happening. But for us, it's quite easy to deploy as a protocol on a new chain, on a new ecosystem, and connect with existing DEXs. And when those RWAs are in place, we're happy to be there and basically provide all that beauty of leverage and limit orders for trading those RWAs. Yep.
I love it. When you say KYC, AML, I'm a compliance guy. That's what I know. That's my background, blockchain investigations. But you talked about those words because there's a regulatory system that forces a lot of these liquidity providers from centralized sources that they have to go through these checks. They have to go through these processes and procedures. What about in the US, right? We saw that the US regulatory landscape and some other countries as well have been really strict when it comes to leveraged financial products, traditional leverage products. And now you're kind of entering DEXs and DeFi into the conversation. How can you provide a level of consumer protection, which seems to be the focus for most regulatory authorities, that level of consumer protection that people aren't going to lose their house, because they're betting on some, hype coin or meme coin that's just come out? How do you protect people, or can you protect people, or is this more so for sophisticated traders?
It's not, in our case, Primex is not for sophisticated traders only. We still have that beauty of being a DeFi protocol. So you can consider protocols like Uniswap. You can compare us to Uniswap, let's say, where you can swap pretty much anything to anything. Of course, you can lose money if you buy a token that goes down 90% overnight. That's something that we of course cannot really protect users from. But speaking about the institutional adoption, and if we have some AML liquidity, so it's an industry sort of, it's the question to all DeFi protocols, right? So given that we do not provide derivatives, we are not issuing derivatives, which is regulated. So in that regard, we still think that we have some advantage because we do not create a new asset. We do not create a derivative. And you can think of us as of Uniswap and Compound combined, for example, or Uniswap and Aave combined. I'm not sure if Aave or Uniswap are banned in the US, simply because they do not provide access to leverage through derivatives. So I would say that those risks associated with any DeFi protocols apply to us, of course, because if we see, we of course, we see what's happening with Tornado Cash and all that non-AML liquidity. Of course, there is some regulation coming to it. So of course, we'll be following what's happening there. But it's not about derivatives. It's not about leverage itself. It's more about access to all that functionality DeFi provides. And yes, it can be harmful for non-experienced users who do not know really what they trade.
That's amazing. I think institutions obviously would prefer that. I think the average user doesn't really care if the liquidity is coming from
The average
a
user
certified-
does not really care, but the
No.
institutions, of course, they do care because they are operating with their clients' money.
Right.
So of course they have to care about it. So yeah, and we understand this. So it's mostly about, AML checks, maybe some industry standards, maybe it's about some clear regulation, because we still don't have clear regulation in place. Not only in the
Tell me
US.
more about your risk, because you've talked about platform risk. I
Yep.
think these are things that people may not understand. Can you tell me a little bit about platform risk, the risk of DeFi hacks or exploits in your code? And then
Yep.
lastly, does default risk still apply to this non-traditional situation where you're lending? There's lenders and borrowers. So if you can walk me through some of those risks or any more that you can think of, that would be important to note.
Definitely. So speaking about Primex use case specifically, I'm happy to talk about the audits as well. But in our case, we don't have LPs. So imagine you have LPs on Uniswap. LPs always have the risk of impermanent loss. And in our case, we don't have LPs. We have lenders. And the key difference is in the number of assets that lenders and LPs provide. As an LP, you always provide two on Uniswap or its forks, you always provide two assets. For example, ETH and USDC, for example. In our case, you provide just one single asset. It can be USDC. So you basically farm yield on top of it, and you are not exposed to impermanent loss. So you just passively earn yield because someone is borrowing your USDC to margin trade on DEXs like Uniswap. This is how it works in Primex. So in the case of Primex, we do not have financial risks. We only have, of course, technical risks, as any other DeFi protocol for sure. But there is no financial risk of loss because you hold something and it can change in price, for example, as you do it as an LP. So this is the major difference, I would say. Speaking about other security mechanisms and how we protect lender liquidity, I would say that, of course, we have some limitations with regards to leverage, the maximum leverage that traders can experience, and it's based on some specific asset-specific parameters. Previous
so it's
volatility.
different for each asset, how much they can.
It should be.
That's so interesting. Is that how it is? Like if you went to an exchange, or do they have a flat 100 times is the amount that you can go, no matter the token, no matter the asset? I feel like they have a flat rate, right?
On exchanges, on derivatives exchanges, centralized ones or decentralized ones is different because the nature of such derivatives platforms is different because you have two sides of the market. You have funding rates, and basically an exchange is always a zero-sum game.
Right.
If you look at a derivatives platform, you can see, protocol, decentralized one, without saying specific names. But if you look at it, in most cases, you have some LPs and you have traders. And if traders win, LPs lose, and vice versa. And in the long term, of course, LPs usually win, so they get interest because traders lose in the long term more than
Yeah,
than LPs,
that makes
and
sense,
it's a
right?
zero sum
Yeah,
game.
I see.
In our case, lenders do not care what directions trader trade, because they basically earn yield by providing their liquidity to the pool where it's being borrowed by traders. So we are not a zero sum protocol. We add additional liquidity on top. It's another major difference compared to those protocols. And yeah, so but of course it has its limitations. We cannot
Right.
provide 1x, 100, I don't know, 25x leverage that is already available on centralized exchanges, simply because the mechanism is different. And we
What if I'm
allow.
a trader? I borrow funds from one of these lenders. They're getting their yield, but I lose all my, I'm a reckless trader, don't know what I'm doing. I lose all my crypto. What happens in that instance?
Imagine you have 1,000 USDC
Yeah.
as a capital you want to trade with. You can borrow 4,000 USDC more. So it's essentially a 5,000 USDC position. And with that entire amount, you make the first swap to essentially enter the position. And if your position goes down 20%, minus fees, of course, small fees, you get liquidated. So the use case is the same as you have it in a centralized exchange, pretty
Okay.
much. So you basically risk with that amount of money that you are ready to lose, that you are using as a deposit in our case, right? Because you have to deposit
Interesting.
something to borrow something else. And yeah, that's essentially how it works. So you basically control your risks as a trader. You can see what's at stake when you enter the market, when you start trading. Really similar use case. Even if you look at the current implementation of Primex at its first version, you will see that even the UX is pretty similar to what you see on a centralized exchange, but it's fully DeFi, it's fully decentralized, which is interesting.
That is, yeah. One of the biggest knocks that, we hear with DeFi, Web3, even conversations we have with people in Web3 is basically people don't care about decentralization from a user standpoint until decentralization provides something that a user can't get now, which is user experience. They still say how clunky Web3. This is something I think your team is passionate about. Can you describe what are the UX problems when it comes to DeFi, Web3? I've seen some of these platforms, they look very similar to a traditional order book, but there's just definitely some clunkiness. What are the problems, and maybe how does Primex approach solving those problems?
Well, first, we still lack a bit of education. If you look at, and we still use a really technical language when communicating with the user base. So if you look at, same applies to Primex, of course. If you look at different websites of protocols and you just start reading about them, and if you don't know nothing about crypto, it will probably be difficult for you to understand. So that's one of the first problems that should be tackled by the industry players on different levels. We still have an early community that is already quite technical. We still have some OGs in the space, right, who are in the space for a few years. They're already OGs, but it's still really young and small market. And the first thing that we should think about is education and simplifying the language. Of course, some great things that, for example, Vitalik is talking about, like account abstraction, they're still yet to come, and they will simplify how people interact, the process of interaction with DeFi protocols, for sure. So we still have to deal with some technical challenges to simplify that process. But we already should think about how we could communicate it better, communicate the benefits better. There is still a big question about big challenge for a lot of people in terms of using Web3 wallets. People do not really know how to use Web3 wallets yet. Not many of them know. Some of the industry leaders like Uniswap, you can look at their, for example, FAQ and how they explain things, what is recovery phrase or something else. I think they are one of the best, or maybe the best in the industry about in communicating those, technical things in a really simple way. And if you use Uniswap, it's pretty easy to use, right? They have fiat on ramp and different perks.
They have to be. They want the most amount of users. So in order to get the most amount of users, you're going to have to break it down to every single person how to use their service.
Of course. And smaller protocols like us should follow it for sure. And we're already working, and we have some FAQ in place that explains how the protocol works in simple terms, and how people can connect their wallets, how they can use hardware wallets when interacting with our application. So there's a lot of small things we're working on. And of course, speaking about the interfaces, for us, it was important to provide an opportunity for those who want to buy crypto and start trading, and also provides just one-click experience. So for trading on Primex, you just simply need to connect your wallet, and that's it. You're ready. That was the idea.
Interesting. Do you think that, leverage trading, is this still a very niche part of the industry? A newcomer to the industry, they want to buy an NFT, fairly easy. They can even use their credit card now. Is like leverage trading still for kind of like the degenerates and day traders of the industry? Or do you see that being expanded to more, after the boring trades that some people are making, they want a little bit more. They think they understand the market. They need a little bit more leverage. What are your thoughts? Because you've been in this space since 2021, which was, the bull market of all bull markets, to be quite.
It's a niche for sure. It's a
Yeah.
niche. It's growing because in DeFi, especially on small markets, there is a lot of inefficiencies, and there's some number of people who or even organizations already who are joining DeFi to trade those inefficiencies. So there is already a user base, but it's still small and it's growing. And we expect that user base will grow quite significantly in the next 5 to 7 years.
Is your approach for institutions or, your average recreational individual user?
That's a tough one because we just launched, so we do have some first traction. But given that we are a DeFi protocol, we of course will be having a bit of both because we are accessible to everyone. There is already some number of institutions interested in being lenders and traders, but there is also a consumer public user base with small deposits and those who want to trade random tokens with leverage. So a bit of both, I would say. And those are completely different processes in terms of the acquisition of those users on the markets. Yeah, for sure.
On your website, you mentioned AI, machine learning, artificial intelligence.
Yeah.
How does that vastly improve some of the products and services that you're coming out with? And how does that play into that user experience?
Definitely. So the application of AI and ML in blockchain, I believe personally, that's my humble opinion, but I believe that it will change the industry drastically in the next few years. And by that, I mean that you, of course, make the capital usage way more efficient when you have, for example, credit scoring that is decentralized. This is what TradFi has for years. And this is what we still don't really have implemented in DeFi. And imagine you can have a score in DeFi and you can borrow some money for, I don't know, your day-to-day use with a small collateral in DeFi. That's great. I mean, that's something that can only be achieved with credit scoring and reputation mechanisms on chain. And for that, of course, we need to have an infrastructure in place that, where those MLOs can be hosted and stuff like this. But this is one of the potential disruptions that we expect in the industry in the next few years. There is already a few projects that are focusing on supporting that infrastructure. So we'll come to that point in a few years, I'm sure about it. In the context of Primex, we do have some developments related to it. We think it will be rolled out a bit later, I think in 2 years, maybe 1 year and a half. So it's a long-term plan, but we have some developments. We do not really talk about them yet because they're not ready, but we do have some models that will probably apply as a protocol. That's pretty exciting.
I think credit score, for those that aren't technical that are listening to this podcast, credit score is the only word that they picked up on. They're like, yeah, credit scores make sense. Do you see there being oracles that have certain information where they're leveraging traditional credit scores like your Equifax? Or do you see it being more, as you said, reputational, behavioral based, or just previously history based? How many dexes have you engaged with?
Mm-hmm.
How well have you been trading? Which a lot of that information is completely transparent. How do you see this future of credit scores where there's been so much pushback to the traditional way that credit scores have been done? Biases, systematic racism has been brought into the conversation. What is your experience with the way the traditional credit score system is working and how you see the future of that?
In the traditional finance, I would say that it's pretty, of course, well developed. It still has its limitations, and sometimes it fails, sometimes it fails. We will see that. So there is a huge number of over leveraged organizations, and sometimes it's not working. But speaking about DeFi, I would say that a few ways scoring can be used, as you mentioned. In the context of Primex, of course, we were designing the scoring component based on the history of interaction with the Primex protocol, of course, so that those borrowers who always return their loans. They are, of course, scored better and better over time. And we have that, gradual sort of mechanism of scoring them based on their, for example, traits, previous traits, how skillful they are. So we have multiple different criteria. That is, yeah, how to basically evaluate them. But I imagine that there will be a scoring mechanism that is pretty much based on interactions with a wide variety of DeFi protocols. If we imagine that there is a few of them that support under collateralized lending at some point. So that will be a big database of scores. That's what I envision. And potentially we might also inherit some of the scores from TradFi as well. Of course, why not? That's also possible. Especially, So there is huge number of opportunities. For now, at Primex, we're designing the scoring component based on previous interactions with Primex, on previous trades, on some data that we have, Primex specific data that is on blockchain. This is what we have for now.
Earlier in the conversation, you mentioned flash loans. Now, in prepping for this episode, I read a little bit of an article that you wrote with, blockchain, self-named blockchain Gandalf here, Finlo Bates, which mentions this concept of flash loans. What is a flash loan, and who are the industry players that are using these types of loans? And give me a scenario, a flash loan, and a scenario where somebody's using these flash loans.
To be frank, it's a bit difficult for me because it's more of I would say, digital type of thing. Flash loan essentially is a loan that can be used within a single transaction block. So something that you can borrow and return in the same block. It's quite limited because you cannot really take some certain amount of money and use it for an extended period of time, right? So you should basically return it in the same block, which makes the time that you have quite limited. So it can be used for, I would say, really sophisticated DeFi use cases. I'm pretty sure flash loans are used to sometimes manipulate something with liquidity, but I'm sure that the comparison with flash loans in that article was used to explain that the liquidity can be used in an under-collateralized, something to explain that you can borrow more than you essentially lock. And that's the key objective. That's the key point that was
for many
described.
that hear the word flash loans, they usually hear it in the context of a flash loan attack. Can you kind of give a high-level view of what is the attack? You're saying
that's exactly how it works. Flash loans can be used for, sometimes the liquidity pools are not really optimal in terms of the risks, and sometimes they can be manipulated with those. And some liquidity pools are not protected this way. So sometimes you can get a lot of, for example, voting power by using flash loans, and that's what we saw in some governance in governance of some protocols previously, to essentially do harmful things in DeFi, sometimes to steal money. And so this is a flash loan attack. I would say it's a broad term, so it can be flash loan can be used differently, right? So in that regard, I would say that we're of course trying to protect this flash loan as well, but that's just a comparison to explain the under-collateralized nature of Primex in that article, I think.
Earlier in the conversation, you were about to touch on, audits and the security of the audits. Recently, you partnered with our friends here at Halborn. We know them well from the blockchain investigation space, the work they've done with some of our clients of Airdrop, my company, with Chainalysis. So can you discuss what was the needed for this audit? Why the audit? We see a lot of DeFi protocols being exposed and vulnerable. And, a lot of people point the finger at, the lack of audits that they did, the lack of pen testing, the lack of, testnet testing that they did. Explain the reason why you prioritize maybe security where other maybe DeFi protocols did not.
I would say that audits are definitely the must in the industry. And I think every protocol should really consider being audited by several companies. Halborn obviously are great guys, but it's better to have several great firms to cover the protocol, or maybe even freelancers. There are some great projects, DAOs in this space, where you can get your code audited by great individual auditors. That's also the possibility. So the thing is that it's important to consider that when you're developing a protocol, you still have some limited sort of vision on its code. Especially over time, you are, adding the code, and it looks nice and good, but you still have.
You you can't see the mistakes. It's like editing a
Exactly.
podcast. You can't
It's
see the words, you see the code, even if it's not there, right? Just because your brain's trained to look at it a certain way.
it's a human nature. So we do make mistakes, and it doesn't matter how good you are as a developer. And those companies that are professional in auditing smart contracts are definitely needed in the space. And there is a lot of, I would say, security things that we still lack in the industry, such as, for example, insurance protocol. There is not so many of them, and we need them. That's a huge use case to essentially protect liquidity pools from the loss of money. And I expect that we'll have some more insurance protocols as well. So secure, yeah, audits are important. We've been audited by 3 different companies. It's fairly expensive process, but it's a must for sure. So that's
Well,
what I can say.
it saves you having to, offer bounties for the 500 million or 200 million or 100 million that the hackers steal from you because you don't put in those those
Um,
protections
it's
early on.
it's important for users, DeFi
Right.
users. It's always important to consider that even after a protocol was audited by, I don't know, 100 different auditors, it still can be hacked.
Yeah.
And there is still some risk that exists, and every DeFi user should consider these risks. Of
I think
course,
that's an important note.
yeah,
That, yeah, even with the audits, it's still
yep.
a transparent code
It's,
that hackers are looking at all day, every day.
it's not
And
a
there's
guarantee
always
for
going to be
sure.
others.
It's not a guarantee. Yeah, it doesn't guarantee anything. So be careful.
Partnerships seem like the backbone of DeFi. I saw on your website there's been a couple partnerships with blockchains. Tell me some of the most exciting partnerships you have, or the most interesting, something that maybe a listener wouldn't expect you to a company or a service provider wouldn't expect you to partner with. Talk about some of your best partnerships.
I would say that, of course, we are in touch with multiple ecosystems. We have a lot of great things that we're discussing now with the big ecosystems that are still not yet announced. We are really excited about recently deploying on Arbitrum. We, by the way, plan some interesting things with them as well. So stay tuned. And I would say, yeah, so there is a few partnerships that we still have to announce. Some of them are our clients, I believe, in the future. So stay tuned. For now, it's mostly about the audits, the deployments. We are also expanding our use case by integrations with other protocols and some decentralized exchanges that are interested in integrating our functionality into their interfaces, for example. So we are expanding our use case by making it available for users of other dApps or even wallets. So potentially you might see our trading widget in some wallets that you use, not necessarily in our interface. So there is a few partnerships that we are working on now. Yeah.
I hope our internet, our Twitter sleuths can kind of pick up on the words that you're using. Is that the toughest part of your job as a biz dev person, that you can't really announce everything at one time? You have to kind of stagger it. One announcement of a blockchain, let it get the hype, maybe a month later announce another blockchain. Is that tricky for you when you're trying to get more business, but you can't announce everything that's happening because it hasn't been completed yet?
Yeah. Sometimes it's challenging because sometimes you get too excited. But, we are always careful with what we are saying in public. And actually, you get used to it. So it's better to have something in place rather than announcing something huge, which is not happening for some reason. So this is that is, yeah, sometimes it's difficult, but it's fine. And I'm
And
not
it's
the
crypto.
I'm
Anything
not
can
the guy
happen
who
within
is
a span.
I'm not the guy who is working on announcements. So
That's probably why you get too excited. They have to give it to somebody else that doesn't get too excited. Talk
yeah.
about, you've raised funds, or Primex Labs has raised funds. Talk about any advice to builders, entrepreneurs, service providers are listening to this show. Did you have any struggle with finding funding, or based on your experience of building a business, what were maybe some of the last, we have last 7 minutes of this call. What were some of the struggles or challenges that you had in getting funding, or any other aspects of the business?
Yeah, if we look at the previous 2 years and all these things happening like FTX or Terra, that was really bad for fundraising previously. So it of course depends a lot on the markets and the capital inflows. And of course we see things differently in different conditions, and valuations drop during the bear. So of course I believe that there were times where it was not really a developer friendly environment. If you talk about fundraising, it's getting better. It's still not that good as it was 2 years ago when we were raising, but we expect it will be better now this year. We see some really positive dynamics in the space. And by the way, we'll already be raising another round. I'm pretty sure about it, the private one. So some advice, I would say that, of course, you should always structure as a founder. I think you should always structure all the materials that you provide your investors with. It should be clear. It should be detailed. You should have really good GTM. Sometimes it was, some educational process for us as well, because sometimes we're being focused a lot on tech and we're describing, how the protocol would work. And there are certain VCs that are not that much interested in tech. They're not that enthusiastic as you are, because they have
No,
hundreds of
they want to know
calls.
first million users. That's all they care
Exactly.
about.
So sometimes, as a passionate founder, you are focusing a lot on how your thing works rather than what it would, what benefits it would provide to the community, how it would be monetized. So you should think about different things. On the bull market, of course, it was easier because everything was growing and you were just a viable technical use case was even enough to start raising. But at this specific point, traction is important, and that's what we're working on. And there is a few ways how we could improve it. I believe depends on the project, of course. What is also important, and that I would mention, I would say you should always build a network of VCs that trust you. And it's of course important to have connections in the space and warm introductions. That's what helps a lot. That's what helps a lot. And materials, clear pitch, introductions, and ability to explain sophisticated things in simple terms. That's what
I think you do that really, really well. I was going to wait till after the show to say this to you, but I think you've done a really great job. Usually when we get technical people on the show or any show, right? It's like, it's hard for them to put everything in a concise 3-minute answer, right? They have to explain everything and how it works.
Yeah.
Overview. I think you do a really great job at that.
Thank you.
It makes sense why you're kind of heading the business development of the protocol. Where can people find you, Dmitry? I know you guys have a blog on Medium, some interesting articles there, but where can people find you? Where do you want to point people to absorb, as you say, all that great information that Primex Labs is putting out there?
I'm not really active on socials personally. I'm also solid around, building relationships and things. I'm also on Primex Discord. I'm always there to chat with the community, to explain how the protocol works and things like this. I'm also on Twitter, but I don't really post, unfortunately. I'm not really into it. Maybe in the future, I'll be somewhat more active. I'm on Twitter at Dmitry _Tolok. And I think that's pretty much it. I'm just sitting on Primex Discord, and that's it.
You have to, it's all these platforms, protocols, it's all about the user base, right? And you need them to educate other people and to tell other people about the user base. It's kind of hard to go on Twitter and say, hey, look what we're doing. You lose people under collateralized. I think that's where you probably lose the majority of people on Twitter with using one term.
Yeah. Feel free to subscribe to Primex _official, our official Twitter. I'm one of the guys who is involved into the announcements, but I'm not writing them. But still, this is the best place to get updates about what we're building, if you're interested.
That's awesome. We're so excited about the future announcements. We'll definitely keep our viewers and listeners up to date on everything that's happening with Primex Labs. Thanks so much, Dmitry, for joining us on the show today.
Thank you so much for hosting me. Yeah, it was a pleasure. Thank you.
Thanks.